How much home can I afford? Hey everybody, thanks so much for joining me today. My name is Jeff Trevarthen. I am Jeff the Mortgage Pro, and today I have a great one for you. I have a calculator that I actually had built that is about how much home can I afford. Now, this isn't like exact. This is an estimate, obviously, of pretty close to what you can do. And so what I thought I'd do is show you an example here and walk you through exactly what to enter on this spreadsheet. And if you'd like a copy of this, happy to send it to you. Just make sure that you reach out to me via email and I'll send it to you. But let's go through some of the parameters here on what you need to do. So the first thing you're going to need to enter on the how much can I afford spreadsheet is your annual income. So in this instance, you can see that I've added $147,000 for the annual income. And then for the minimum monthly debt obligation, this is car payments, this is student loans, this is credit cards. You want to look at the minimum monthly payment that you have to make every single month and add all those together. And that's the number you're going to put in the minimum monthly debt obligation. So in this instance, I just entered a number of $325. Let's say they have a $325 car payment and then they don't have any credit cards or anything else. And then let's say that your percent down is going to be 10% in this instance. So I entered 10% down. You can also switch that over to a dollar down payment as well. And then if you look at the next box over, it's the annual interest rate. This is the interest rate on your loan. And for most instances, well, not in most instances, but in some instances, it could be higher or lower. I just used an interest rate of 7% as an estimate. You can kind of play around with this, and depending on what type of loan you're getting and what time of the year it is, and when you're looking at this calculator, just figure out what the interest rate is of the current environment right now and use that interest rate. But right now I'm going to use 7% for an interest rate. And then the last little box that you could enter is if you're buying something that has an HOA fee, so a condo, a townhome, also called PUDs with single family homes that are in developments that require an HOA. All of those things have to be counted against your debt, and that's why that's a separate space for you. So in this instance, I did not have an HOA fee. We're going to assume we're buying like a single family house without an HOA fee, and then the numbers down below will readjust based on how much, or all the numbers that you just inputted right there. So in this instance, you can see that there's 4 different columns. There's a debt to income ratio column or row that goes across. There you can see that there's 38%, 43%, 45%, and 50%. And those things are relative to how much you can actually afford. So if you're in the 38% debt column, you can see that $582,246 would be your estimated home purchase price. If you're at a 38% debt to income ratio, you are solid. And so you can see that that one is highlighted in green. That means that's a go for sure. You're probably going to be able to get a loan for that much. If your income is that much and your minimum monthly debt obligation is that much and your percent down is that much, you're going to be able to qualify for that loan really, really easily. The next column over is 43%. That's a little bit higher debt ratio. The reason why 43% is significant is that typically on jumbo loans, that's the maximum debt to income ratio that you can go to. But it's still affordable in terms of conforming or government loans, most likely. You can still be able to get a loan with that. So that's highlighted in green as well. So you can see the 664, 608 would be your purchase price on that particular instance. And then if you go up to 45%, we're starting to get pretty high here. Some jumbo loans go that high, but not all of them. It's definitely an overlay on most jumbo investors. And then conforming loans will definitely go up to that high, especially if you have a really good credit profile, meaning your credit is good. But I made that column or that row right there yellow because we're starting to get to the point where we're almost becoming unaffordable. So $697, $553 would be your maximum purchase price in that instance. And then the last column over is 50%. And this one is going to be red. You can still go that high, especially if you have really good credit. If you're using a government loan like a VA loan or a FHA loan, you can definitely go that high in those instances, but you're also going to have mortgage insurance, which is one of the only things that I did not include in here, because we're trying to look at loans in general for how much you can afford. So that will give you pretty close to the maximum. You can actually go over 50% in some instances, but that will probably take into account mortgage insurance, and that's about the maximum you're going to be able to afford when you're buying one of those properties. But 50%, you can definitely go that high if you want to, but it's not always recommended. Just because you can qualify for a $779,000 house doesn't mean that you want to make a $5,579 monthly payment, right? So this is just an example of how to use this. How much home can you afford? What I'd love for you to do is to reach out to me at the contact information that you can see here. And if you would like a copy of this calculator, please feel free to reach out, and I'd be happy to send one to you. Thanks a lot, and have a great day. Look forward to chatting with you on the next video. Have a good one.